The currency markets and a strong dollar and weakness in the Indian equity markets have pushed the rupee lower in the trade today as well. The currency has ended the day at 62.26, which is more than 0.5% of a decline. Remember, it's the second straight day of decline coming in for the new year. Let's take it to the experts then. And Paresh Nair, head foreign exchange and fixed income, First Rand Bank, now also joins us on the segment. Paresh, hi, welcome. It really hasn't started so well for the currency in 2014. But having said that, are you really expecting the kind of broad range we saw in 2013 to yet again show the performance in 2014?
Yeah, today was, I'll put it as an active day for the rupee. After opening 61.75, we have seen rupee weakening, and as you said, closing around 62.25. Definitely it was coupled with weakness in the indices. If one has to see that what happened in 2013, I think we had gone through the extremes for the rupee, and we have been maintaining that now India is much better prepared. I will not say that the pressures are off rupee. Today was a classic day. But if there is a continuous weakness which we might see because of the fact today I believe Rand touched nearly 5 years low, and even Brazilian real has also weakened quite a lot. So emerging markets currencies have seen weakness coming up. But on the other side, I think RBI as such is much more prepared today in case there is a sustained pressure which comes on the rupee. Broadly, I'll see that I'm not looking at the extreme volatilities as 2013. We do have some pressures, and if one has to see that today's move, I won't be surprised that tomorrow again we see rupee weakening a bit more.
Paresh, I just want to understand on how we've dealt with the day today, because in the Asian markets you saw a weak US dollar. Most of the emerging market currencies were trading flat to slightly on the positive note. Even the Indian equities and the regional equities were doing well. But come European markets, and all of that really seemed to have turned around. The equities declined, the rupee declined. We saw commodity prices gain up in the international markets as well. So do you see, the fund weightages coming in, or how do you really explain the day that turned around?
You're right. In the morning it was all positive, and definitely Indian rupee was at 61.75 with the equity market nearly 200 points plus on the Sensex. But when the European markets opened, and that's the time we saw that some profit taking coming in the European market equity side, euro actually has gone below 1.37, and I feel that there has been some activity from the foreign investors because of the sustained pressure which came on the other emerging markets, and that's what we saw on the Indian rupee. But yes, stock market, the way it behaved, and that is how the rupee also started weakening. So it is looking like there had been a major play from the foreign investors rather than anything happening on the domestic front. And hopefully, I don't know whether it's going to continue the way we have seen a few months back. If there is again concern about the emerging markets with the US Treasury yield of 10-year moving towards 3.05 and US economy doing much better, is there going to be far more pressure on the emerging markets?
Vijay, getting you in the conversation as well. And how are you, first of all, reading the kind of turnaround that we saw in the US dollar index today?
Manisha, I've always maintained that the scope for appreciation of the rupee vis-a-vis the dollar was limited. And the fact that the dollar index has gained indicates that the US greenback is showing signs of relative strength vis-a-vis the global basket of currencies. This is clearly to do with safe haven buying of the dollar. There's a flight of capital into the US markets. And I would expect the 81.20 level to be a critical level to watch out for. As we stand today, I think 80.20 to 80.25 is a level I would watch out for the USD index. Unless that is breached, I would maintain that the US dollar index is headed higher.
Paresh, how would you look at the various things that are spread out for the month of Jan, even as we get into the new year? You have the inflation data coming in the mid-January. You have the RBI policy on 28th of Jan. What are the expectations now from the domestic markets to these numbers?
Yeah, you're right that the inflation data is going to be very important, and this time I think market is very keenly looking at how the CPI is going to come up, and definitely RBI has started looking very closely on the CPI numbers. But the expectations are that the consumer inflation is going to be lower, the CPI numbers could be lower, and it might have got the impact on the WPI as well. But RBI policy is going to be very much dependent on these inflation numbers. So there have been earlier views that there is a possibility that the inflation pressure is building up, so RBI may go with the rate hike, but I will put it as a 50% chance as such. And it's too early to say how the inflation numbers are going to come up. But obviously we are seeing that on the consumer inflation side, vegetable prices and fruit prices are lower. So it may show that the numbers are a bit lower on the inflation side as far as the CPI is concerned.
So are you or aren't you expecting an interest rate hike on 28th Jan?
My personal view is no rate hike on this Jan end.
But that kind of a background, Vijay, how would you look at the rupee then spreading out for the month of January for this year?
Manish, I would buy the dollar on dips. I'm fairly made up on that. And in addition to the dollar, I think the rupee is likely to weaken against the euro, especially if the prompt month futures are likely to go above the 86 levels on the euro INR. Where the dollar is concerned, I think the day you see the dollar USD INR prompt month futures trade sustainably above the 62.80, 62.90 band, I think there will be a short squeeze, and the level that I talked about of 63.25 will then become a high probability affair.
Final question then, Paresh, and it's not just the Indian markets that we will be watching in sense of data. The Fed tapering also takes effect from January itself. The date, of course, I'm not too aware of, but do you see an impact of that also coming in for currency?
I think the way today the pressure, I'm just repeating, on the emerging markets, one has to be carefully watching it. Is it the fear of the tapering which is coming from the foreign investors? And next couple of days of trading will show us how the behavior is going to come up. Overall, the tapering news has been already discounted in the domestic markets. One has to watch that. Are they going to continue to taper every month or not? That will be much more important. But yes, it's too early to say that unless we are seeing that US data, which is coming good. And after January, for the first one, tapering, I don't think so there's going to be an impact from that angle. But we have to watch it, that what's going to happen in next few months if the tapering is going to go on. And that can cause a bit of pressure on the rupee more than what we are expecting today, as we are seeing 63 and 63.30 as good resistance. And will that get sustained in case there is a sell-off on the equity markets and foreign investors do really take their capital back?
All right, so that's the view coming in for the currency, not ruling out yet another day of weakening in the markets tomorrow when the rupee opens up for trade.